Hello everyone and welcome to my more important analysis videos on Thursday 20th of December with me, Richard Perry, market analyst at Hantec Markets. We are in the midst of reaction still to the Fed last night, and to be honest it was a pretty disappointing reaction, I think, or meeting, let's just say that, from the point of view of the markets actually. The markets had gone significantly dovish in recent weeks on rate hikes, and the Fed just unwound a slight amount of the rate hike expectations for 2019 back from 3 to 2, whereas the markets are struggling to price in 1. So subsequently we saw the dollar rallied a bit on the hawkishness of that, but ultimately that's a disappointing move, and there's a significant sort of rate flattening aspect to the yield curve. We saw 10-year yields sharply lower, 2-year yields holding up. Subsequently, the 2 to 10 spread actually fell from, well, it was 17 basis points back down to 10 basis points. So this yield curve continues to flatten, and subsequently the disappointment that we've seen is hitting through the dollar today. Look at the euro, strongly higher. Sterling, even strongly higher. You've just had retail sales out for sterling. That's helped. Positive retail sales helping sterling. But this is a chart that I find very interesting. Yield spread, bunds under treasuries yields. Very good correlation there. So that would suggest that euro dollar is breaking higher. And one of the reasons why we're seeing it so today. So let's have a look at dollar index, which is now certainly now breaking that uptrend channel, and sort of testing that support area around, coming back towards 96.40 area basis of support. Breaking down below that, you're sort of turning corrective again. And I think this sort of could be a theme of 2019 playing out here, that the dollar starts to struggle. So we've got that at the moment, but generally speaking, risk appetite is not looking happy either. We had the disappointment in the fact that the Fed was not as dovish as perhaps the market had hoped, let's say hoped rather than anticipated. And subsequently we've seen equity markets sharply lower. Wall Street 1.5% down. Futures also lower, although rebounding a touch, I think you could argue. DAX and FTSE were sharply lower, 1.5% each initially, but that has unwound a touch. DAX is closing a gap that's actually at 10,750. Still 100 pips away from that, but yeah, it needs to close that gap to really sort of have any real prospect of a positive reaction. It doesn't look as though that's likely to be seen, but let's have a look at S&P 500 breaking sharply down. Doesn't look good. That's actually old. Let's get rid of that. So yeah, breaking sharply down to 530. That was an old support, key support, breaking to new lows dating back over 12 months now on the S&P 500. So yeah, strong moves to the downside. So dollar negative, yields negative, equities negative. What is there more to say than that? So yeah, we're seeing gold sharply bouncing again today, back above 1250. Can it close above 1250? That's a key level. I'll talk about that in the technicals. Look at the oil price, 3% on oil. Back lower, sharply lower on oil. You've had the contract rollover, so it doesn't look as bad as it could do on that move, but certainly oil back under pressure. So what have we got to look forward to today? Well, this data, sorry, that's wrong. That should say Bank of England. We've actually got today Bank of England at 12 o'clock, and Bank of England is not expected to do anything. Don't worry about the Bank of England doing anything to sort of change the outlook today. So that's basically what we've got. But UK retail sales, very quickly. UK retail sales much better than expected. Much better than expected. But other than the Bank of England, we've got jobless claims at 130, 216, slightly tick higher, slight tick higher from last week, but still very decent numbers there. And the Philly Fed, which is actually expected to increase, but bear in mind how the New York Fed declined quite strongly. That'll be an interesting one to watch this afternoon at 1:30. So my chart today is Euro Aussie. We've seen Euro Aussie gaining ground, nice strong uptrend, but look at that big bull candle. That move has really taken hold today. as the retracement of that October to November sell-off has sort of continued, you're back through the 61.8% fib, which has interestingly become the basis of support at today's low. But you are within this uptrend. Look at the strength of the momentum. MACD lines, RSI, stochastics, nicely, strongly, positively configured. 61.8 is 76.4%. So 61.20 is the 76.4% fib. That is on for a test. You've got these resistance levels from October coming back into play. Can you get the crosshair on it? Yeah, there, 61.90 and then 62.50. So little corrections are a chance to buy. You've got the breakout above the near-term resistance that has now turned supportive, 58.90. Watch out for that, but certainly looks like the bulls are on a run here. So I wish you good luck in your trading today, and I will speak to you again later.